Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just to let me know that it is working. Hope everybody's having a fantastic morning or afternoon or evening, depending on where you are. I'm excited. We had a fun class this morning, Banker's Close. A little bit of a rough trade, but ended up working out. The pound franc position, euro pound worked out fine. Pound franc just took some extra work to make that profitable. Um, and then I'm sure we can recap some of that in here, but I do want to spend more time going over basic stuff here. And then on Monday, we'll recap kind of how the rest of that trade panned out. And then as you guys know, we have our positions on the USD CAD and Aussie yen trades that we're holding over the weekend, and they're swing trades. So, obviously we're going for, over 100 pips on each one. So it's going to take a while to get to those targets, but they're doing awesome too. So anyway, guys, let's go ahead and jump into this. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you're to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So what I want to do today is talk about trends, support, and resistance. Now, specifically, let's actually start with trends, and what a trend is in the market, because this is a topic I feel like I've cornered it pretty well, but in the industry, it's not cornered. Everybody has their own opinion on what a trend looks like, what a trend is. And I want to make sure that you guys today can identify what a trend actually is. So if somebody starts drawing trend lines, you can say, nope, it's supposed to be drawn this way. Nope, it's supposed to be this way, because so many people, it's just so erratic. And I want to make sure that you guys know exactly how to do it. Okay, so, and we'll do that. We'll talk about support and resistance. And then at the end, we'll probably do a lot of supply and demand identification and what good supply looks like, what good demand looks like, so you can start finding some really awesome trades. Okay, so we'll kind of unpack each thing. I did have one of you requests that I talk about this week. Just going over trends, support and resistance, how to identify it, which one's good, which one's bad, type of thing. So we'll do that today. What I want you guys to do is, if you guys have a topic that you really, really want to discuss, shoot me an email during the week, send me a notification saying that this is something that you want to learn or talk more about. I can absolutely break that concept down on our next class every Friday. So, I'm looking forward to helping you guys with that going forward. So just make sure you're communicating with me, and we can chat about it. Okay, so let's start with this. Let's actually go to a market. Doesn't matter which one. This is just what I had pulled up here. Let me actually let me see if I can find something that is trending. Actually, I think I know the one I'm thinking of. Yeah, let's go over here. Okay, so, okay. Okay, so in the market, when you're doing a lot of analysis, one of the most basic things people like to do is they like to place their trend lines on their chart. They want to kind of corner the market and kind of have a starting place, because when you just pull up a flat market like this, a naked chart, okay, you have to start analyzing it and breaking it down. And one of the things that people like to do, and I like to do this too, is breaking down whether or not there's um, a trend line or a trend that we're working with. Okay. Now, when people draw trend lines, I've often seen people just draw any line from point A to point B as a trend line. They'll pull out their trend line, um, uh, I guess, tool, and they'll draw it from one point to the next point. They'll just go from here to here and say, oh, that's a trend, right? Because I can go from point A to point B. And I'm trying to find a good example of just a point A to point B trend line that people draw. Yeah, for example, let's see, that was one. Let's see, I'm if I can find one that really illustrates my point. Yeah, here we go. So like right here on this market, this is the Aussie CAD on an hourly chart. Somebody might say, okay, here's point A and here's point B, and that's a trend line, right? Because I've got 1 point to point 1 to point 2 or point A to point B. Unfortunately, that is not a trend line. And I see this happen all the time where people just start drawing their charts up because they think it's a trend now. And here is, it's so simple. It is just so simple. When you find a trend, so for example, let's actually go back to where the market is right now. So here's a trendy market. Here's what I like to do. If you're going to draw a trend line, and it's so simple, go from point A to point B, and you have to have a C. And you can have a D, and you can have as many beyond that. But the requirement is that you have point A, point B, point C. And then anything beyond that's great. Here's why. Basically, anybody can draw a market from one point to another point. I can draw it from here, I could draw it to here, I could draw it to here, or anywhere I want, really, because that's all you're requiring is point A to point B. But if you add that third element, so point C, all of a sudden I can't use this, because if I use that, then where's the C? There is no C, so that's not a trend line. If I want to go here, or I don't know, like maybe here, point A to point B, that's fine, but then where's C? Oh, there isn't. So that's not a trend line. You see what I'm saying? So the reason why a trend line is validated is because of that third point. So 3 makes that perfect union. Okay, so if you have point A, point B, point C, all of a sudden you have a trend line. Okay. And you can go ahead and put that on your chart and feel confident that that is a trend line. Put it on the chart, man. You know, feel confident about it because you've got the 3 points. Now, a lot of people ask me this question too. They say, you know, Steve, do you put your trend line on the candlestick body or do you put it on the wick? You know, here's a wick out here. I think that's a wick actually. I need to double check, but here's my rule on whether you place it at the wick or the bodies. So technically you can do either one. However, all I ask is you be consistent. So if you start at point A and point A has a wick and you want to use the wick, then point B needs to be at the wick as well, and point C needs to be at the wick, and then any other points beyond that always have to be on the wick. Okay. For those of you that don't know, in fact, let's break this down so that we can further talk about this. Let's actually look at a candlestick. Let's like zoom in quite a bit. I'm going to zoom into, I don't know, up here. Let's look at these candlesticks up here and let's really zoom in. Okay, have you ever wondered, especially if you're brand new, what these candlesticks mean, right? And we could have a whole other class. In fact, I'm actually going to write that down because I've been building out my courses still for my basic training. So I'm just going to go, I'm just making a note here on candlesticks because boy, we could talk for hours just on this alone. Okay, basic candles, and then also candle communications or whatever. So basically candlesticks can tell you a lot of things. Candlesticks can tell you a lot. Okay, so when you look at a candle, like for example, this big one is a green one, right? Why does it not have a wick at the bottom? And why does it have a wick at the top? You know, what does that mean, right? So basically the way candlesticks work is if it ends in green, that means it's a bullish candlestick. It means it went up during the lifetime of this candle. Notice how we're on a 1 hour chart. That means that every candle represents a whole hour of trading. Okay. If you go to a 5-minute chart, that means every single candle represents 5 minutes of trading. After that 5 minutes is up, That candlestick becomes history, and a new candlestick is born for another 5 minutes until that candlestick then ends and a new one is born yet again. And again, when you're on a daily chart, that means every single candle represents 24 hours of trading. So it may be obvious to you, but for me, it wasn't. Like, it took, I probably was trading for months and months before I figured that out. So anyway, just so you, for your gee whiz, whenever you're on an hourly chart, that means each one's an hour and so on. Okay, so back to these wicks here and these bodies. So this is a bullish candlestick. What this means is if it opened down here at the body is the open and the close. That's what the body means, okay? The wicks are just representation of how far the market went during the lifetime of the candlestick. So let me read this to you, just this single candlestick. I'm going to read it to you. What this means is the candlestick opened here at the bottom at the beginning of this hour on January 4th at 7 a.m. GMT. And during that hour, this market expanded to the upside. It went up or bullish. And at one point during the hour, we don't know exactly at what point in the hour, but in that hour, it reached a high of up to here where that wick is. Okay, that's what that means. But we also know that during that hour, it didn't hold that high and pulled back, and ultimately by the end of the hour started and, or excuse me, it closed right there, and the next candlestick began right here, right at the close of the previous candle. Right? Let me read the next candlestick to you. So right after that, this red candlestick opened here. At one point during the hour, it was all the way up to here, but couldn't hold that and ultimately pulled all the way back down. Probably even came down to here because you can see there was a wick that came down to there, but ultimately closed right here, which is still lower. It closed lower than where it started the hour, which is why it's a red candlestick. But that is how you read candles. Okay, that's what at least in terms of what does the candle mean, that's all it's trying to tell you. That's all the candle is trying to tell you. Now, every candle has there's different things. Like we might call this a pin bar candle right here, right? With those high wicks on the top, right? That means another thing. We're not going to talk about that today. I made a note to make another course just on that kind of stuff. So, you know, I'll teach you more about that later because today we're talking about trends and support, but I wanted to make sure that you guys could at least read what a candle is before we move forward. And again, yeah, the body of the candle on every single one, whether it's bullish or bearish, is the open and the close. Okay. The wicks are the highs and or the lows that the market was able to get to in the hour, but did not stay there. So if you, for one quick thing, so if you find like this candle right, oh yeah, this is a perfect one. Look at this one. See this guy right here? No wicks. What does that mean? That means that during this hour, it started here and it just kept going up, and ended here with no wicks. So it basically started here, ended here, and there was no variance really. It just, during the hour, just went straight there and that's it. Okay. All right. So anyway, that's what candles are in a nutshell, and how to at least not necessarily read them to tell you what they're telling you in terms of where the market's going, but rather the candles themselves are, I'm just told you how to read what a candle has done, essentially, the history of the candle. Okay, so now we've established that this is a trend. So I can see that that is a candlestick body. If I choose to use the body, then I'm going to go on bodies the whole way. Okay, so basically like that. That's my, if you want to go on the wick, I could go wick. But if I'm going to go wick, then everything needs to be on the wick. Like that. That one almost touches it, is pretty close. So that's point A, point B, point C. And then I don't think we have a point D, and that's fine. All you need is a point C to work with. I think what I'm going to do, I think I am going to use the body though. That seems like a more appropriate use. So I'm going to go back here. So if I were analyzing this, I would say, okay, I'm going to go in here and I'm going to start at the body and basically just go bodies. And then I can draw this out as far as I want to send it. And that's trend line. So that's, basic analysis, right? And that's why I always tell people, if you're going to just analyze, just pick a chart and start analyzing, just start with the trend line. If there is a trend line. If there isn't, sometimes you have to start someplace else. But just start with the trend lines and see if there's other trend lines you can find. Sometimes there's trends on the top side up here. Let's see, do I have, that's a trend line. Look at that. So this one I started right here. I started on that wick. I chose the wick. Okay. And then I go out. I have point B on the wick there. And then I have point C. That's a trend line because I have 3. If I only had this one and this one, it wouldn't count. But I do have 3, so I can go like that. And technically this market broke through it. It did pull back, but it did break through it, which is interesting to see. And we can talk more about what these kinds of different things mean later. But in fact, I just realized there's another thing. Another course I'd like to make. Another thing that you could talk for a long time on. That I just realized. Okay. Because I just realized that we could talk about what breaks and trend lines mean and how to trade breaks and trend lines. And, good entries, good stop losses, good targets on those types of things too. But again, another little practice on trend lines. Let's say you're still analyzing this. Are there other trends in here that we can break apart? Yeah, in fact, I would say, let's see. Is there a trend right here? Yeah, you think you could go off of that right there. That's a little trend line inside of this market. Yep, on the wicks. 1, 2, 3. And then that thing just kind of goes through. I like to draw them out pretty far. See if the market ever uses it again. Something like that. Perfect. So yep, that's a trend line right there because of those 3. And then I just like to draw them out because, again, sometimes the market will use those in the future. Kind of had some confluence right through here and right through here. Right? Kind of a nice thing to draw out just to have it there. Could argue that there's a trend line going on right here. Right? You've got I'd say multiple touches here. 1, 2, 3, 4, 5. Yeah, I would say that works. I'm just going to go off the wicks on this one. Like that. A little trend that the market's got there. So, and you don't want to put too many trends on there. I think we've got the basic things, right? Like if you're going to draw trend lines, I think we definitely have them and we've followed the rules. So feel free to plop them on your charts if you feel like it and you feel like you can use them. This thing is coming up into a lot of trends right here. I feel like at some point this guy's going to break at some point. And we could talk about reasons for that too, but yeah, kind of a cool thing to see. Okay, so those are different trends and those are how to draw trends, and you could go on different charts and do that. For me, for example, if I had this drawn out and I came back to this chart and say the market pulled back all the way down to here, if it found a demand level on the trend line, I would be very interested in being a buyer if this market pulled back into this, because look how strong this is. It hasn't been touched for a while, so that's not a problem. But if it comes into a demand that happens to be, for example, let's say, I would say it kind of looks like there's kind of a demand area right here. So yeah, if this market pulled back, came into the purple area, simultaneously hitting the trend line, oh, that could be a really good trade. Definitely with a good reward to risk ratio type of thing, right? So those are trends. Now let's talk about support and resistance, because support and resistance leads us into supply and demand, and that's how we take so many amazing trades. And it also helps you figure out your take profit. It helps you figure out your stop loss and things like that. So let's talk basics about support and resistance. Maybe we'll come back here. In fact, I'm going to draw, actually, let me draw something up here. Yeah, I'm just going to come up here and just draw my own thing. So, okay. So let's say you have, actually, I would rather use this other chart to draw on. Let me bring this is easier for me to use to draw. Okay. Okay, so now that I have kind of a whiteboard here. So let's say you have a market that comes down and then it kind of goes sideways, right? And then you have, actually, let's actually do this. Let me make this bigger. Let's say it comes down, does this. Let's make it bigger. Okay, so a couple of things here, guys. So this is a resistance, okay? Why is it resistance? And this is also support down here. Why is this support and resistance? Because generally speaking, the market, when it comes up to here, it likes to go back the other way. And when it comes down to here, it likes to go back the other way, right? And so, anyway, it's just something to observe. Now, I don't want you guys to be, I used to trade this way. I used to be that guy that would, I'd see a support or resistance, and, if the market broke past this area right here, I would just buy. I would have a buy stop ready to go, and it would just go up, hopefully. But in some cases, this market would come up to here, break past that level, and then go down and hit my stop loss. And it happened all the time that I said I got to stop trading that way. But yeah, this is support down here, and resistance. And support meaning like it's the thing below you. It's the thing that's helped propping you up, right? Resistance is the thing that's above you, that is kind of creating that downward pressure, right? Now, support and resistance is always meant to be broken. Okay, always. It will always break at some point. The markets have to break it. So I think it's important to remember that, because I don't want you guys to be that guy also that just sells when the market comes to resistance and buys when it's at support, because that's a quick way to lose money too. So, but it's helpful to see these levels because of one thing, in my opinion: breaks of structure. Okay, BOS, break of structure. So if you're able to identify break of structure and where those structure breaks are, you're going to take really, really good trades. You're going to be able to take trades that where you can find supply demand zones that are surrounded by those breaks of structures or breaks of support and resistance, because you'll get really good reward to risk ratio trades. Anyway, it's just overall a good thing. But okay, so let's say you have a market. Okay, so this is resistance, and then also this was a support level. This used to be support and resistance back here, right? Same exact thing, just on a smaller scale. Okay, technically you could draw this all the way out, right? Like this. If this market ever decided it wanted to come up, a lot of the times the market will kind of come up and pause where support used to be. So this was a support level. In fact, I'm just going to draw a bunch of S's right there. This is also support. right? And this is resistance. If I have a, no, I don't have a R, dang it. Just have a B for buy. Anyway, so that used to be support, but now it's becoming resistance. So this is a new resistance level. And then the market can come back down and usually will test at old resistance, which is now, used to be resistance over here, but it is now support. See that? It's support now because this area is, it is kind of an area where it's struggling to break through, and now the market goes up from there, or it just kind of goes sideways, right? So again, support becomes resistance, resistance becomes support. Okay. Now, again, how do you use this? How do you use support and resistance to your advantage? Because I'm not the kind of guy that just says, oh, hey, it's at support now, I'm going to buy down here. I don't work like that. Or, hey, it's at resistance up here, I'm just going to go ahead and sell because it's at resistance. That's not a good way to trade. Okay, and so many retail traders are taught to trade that: buy at support, sell at resistance, buy at support, sell at resistance. When resistance becomes support, buy there, or when support becomes resistance, sell there. That's not a good way to go about it. I mean, obviously sometimes there'll be some good trades that come out of that, but it's not a long-term approach. Here's where I want to teach you guys to be successful. So if we actually go back, let's actually go back to TradingView. Let me find a opportunity that's pretty legit. What's a trade I took recently that had this exact concept? Where did I trade this? I think, let's see, is it over here? I think I took a trade. I'm trying to find a more recent example. I mean, I'm sure I could just find one. No, that's not the one. Let me just see if I can find an example on a, maybe go to like the pound dollar or something like that. Let me see if I can find, because I have to find a good support resistance area. I need something with really good sideways market, maybe. Okay, so yeah, this is actually pretty good. So let's do this. So here is the pound dollar on an hourly chart. Here is it consolidating back and forth. Let's break this chart down. Okay, so you have a market here where you have a resistance right there. Okay, market comes up, comes down, comes up, comes down, comes up, comes down, right? I think we can all agree. And then right here you have support. Market comes down, comes up, comes down, goes up, comes down, and so on. It keeps doing that. Now, again, support is always meant to be broken at some point, and resistance is also meant to be broken too. So it will always eventually break. You can't count on it. It's not something that's a surefire way to make money, buying at support, selling at resistance, like most retail traders and coaches teach you. It's not a surefire way to trade. Okay, so eventually it breaks. So this one actually broke, and so what I like to do when I'm taking trades is I like to wait for a break, and then I wait for the market to come back up into an area. And this might be a little too advanced for what I'm talking about. In fact, I'll try to find another opportunity, but there's actually several different trades going on here. So yeah, this is actually really good. So let me start with this. So the market broke. When I see a market break, okay, of a structure level, that then sends my brain into this mode of, okay, now I got to look for trades in a particular direction. So if the break of the structure is to the downside, then I'm thinking, okay, how can I find trades that are short? How do I find good trades that'll be good short trades? So what I'm doing is I go and look for the mechanism, the thing. I've talked about this before. Let me actually, yeah, I'll do a rectangle here. So I'm looking for the last kind of general area, which I would say is kind of like this. This is the last thing right here that caused this kind of consolidation right here, was the last thing that showed up before this market plummeted, right? And broke structure. So if the market ever returns back to that area, then you can typically get a really good trade. So this market it broke its structure, it broke its resistance here, it pulled back into this. And so for me, that was a really good trade opportunity. Now, does this last forever? No, it actually came back up. It actually came back up and it actually broke its old resistance here. So yeah, there was a short-term opportunity. Like I could definitely see a short position, built in somewhere right here, stop loss up here, and then, target could be either here or down here. I mean, that's 3 or 4 to 1. 2 to 1 is just that. That's easy to get, but 3 to 1 and 4 to 1 was available, or almost 4 to 1 was available. Okay, but now here's what I want you guys to see. So let me delete this. The market comes back up and breaks resistance. So when you see this, I want you to start thinking, again, tell your brain to start thinking, okay, now we're looking for buys. Okay, market broke, BOS, break of structure. It broke to the upside. Now we're looking for buy opportunities. Okay. So, and again, what makes a good support or resistance level? It's the same thing as a trend line. If you can count, okay, this touched, 1, 2, almost 3 times there. Basically, yeah. If you go by the candlestick bodies, it is 1, 2. I guess that one you're counting the wick, but yeah, that one's pretty much resistance. And then same thing down here. This is support. You can see the 1, 2, 3, and then the 4th touch right there. So that's pretty well established that this is a nice consolidation zone. Okay, so now the market comes up here and breaks it. Okay, it comes up here and breaks. So now what you're doing is you're looking for buy opportunities. Now, specifically, what is the last little kind of consolidation for this market, like broke out? There's a couple of areas of interest. I would say there's a couple of areas. I would say you could technically say that this little candle right here is a demand area, because that was the last kind of load up of the banks. The banks loaded up right there before this massive move to the upside. You could use that as a demand for sure. But the other area, and I know it's not the greatest example, but technically whatever they did here in that little, let's see if I can zoom in, whatever they were doing right here in this little consolidation was enough to finally break this resistance that was so well established, right? It was very well established, and then they finally broke it. So this is demand. That means there's an imbalance there. That means there's people willing to buy and sell at that level, okay? So it broke out, and so if the market ever returns back into that area, that's going to make for a great trade. So we come forward, sure enough, there it is. It tapped into it right here. It tapped into it. Here you go. It tapped in right there, almost tapped in there, but it tapped in right here. And look how quickly the market just got rejected from that area. Just totally dejected right there. Okay. And then it actually just kept going up, which is insane. But like that's an insanely good buying area. Why is that a good buying area? Well, it all started with structure. It all started with this in the beginning. What are you looking for? You're looking for solid support resistance. We've established that. Okay. We got a range here. If we break to the downside, we're looking for sells. Okay, great. We're looking for sells. It broke down. Where's the last little demand area? You got demand right through here, and maybe include some of this. or excuse me, a supply. You got supply up here because this was the last kind of, you could even just kind of include this right here. This was the last little supply before this market broke down. Or this was the last kind of load up area. This was the load up area. Whatever they did and loaded up here caused such a hard break that it broke all of this that they worked so hard to build. They built this up. So they must have done something crazy right there. You see where I'm going with this? I'm hoping this is making sense. If you start seeing this and you're like, wow, this is making sense. Like you can see where the money, like the money flashing in your face is right there. Like this is something that you can use every single time. So again, they built this up, and then whatever they did there caused a break of what they built. So if the market ever comes back and retests that area, that's a great trade. That's a great trade. Okay. So obviously you're looking for sells at that point. So you got a really good sell opportunity right here. Obviously it doesn't last forever. It goes down 200 pips or so. I mean, great opportunity, but then ultimately it comes back up and it breaks its age-old resistance, right? It breaks its resistance. I think it's interesting that this demand zone used to be a supply zone. It's really interesting, like the same area, right? Very interesting. But now I'm going to delete that one and just use that demand area. So now the market breaks above resistance. It worked so hard to make this, and then it finally busted through. So now your mind's thinking buy opportunities. We're going for buys. Okay. And then what is the thing that caused? What is the little loading up area? Where did they load up their ships, or where did they load up their, their supplies? They loaded up right here. And that's what caused the breakout of what they worked so hard to make. So if the market ever comes back into that purple area where they loaded up, boom, boom. Just insane opportunity, right? And we could go find tons more of these. Like let's do one more and we'll wrap up. And we'll do it a little quicker now that we know what we're looking for. I can already see, like, you can see this is the demand area right here. The market dipped into that and went up. Kind of cool. Trying to see if I can find another good one. Oh man. I mean, they're everywhere. Trying to think of one that I've traded recently. I want to find like an actual ranging market, one that goes sideways, one that's actually going sideways. And then see if I can find the breakout. Oh yeah, let's see. How about this guy? Yeah. This one's not as good, but it's still there. I can see a lot of opportunities here, but I'm just trying to find one that I really, really like. Okay. Yeah, so I like this kind of thing. So you can see right here, well, this one's not as good, but it's still there. Okay, so this thing, I don't know what happened here. This is kind of crazy, what happened here. But nonetheless, let's just use this right here. So this is a support area, right? This is all kind of support, touches multiple times, support. And then this is generally your resistance right here. Okay. Yeah. So you got the market that comes here, touches, touches here, touches here. Okay. Ultimately, the market breaks down. So what are you thinking? Looking for sells, right? Now, if the market ever comes back up into if this market ever comes back up into the thing that caused this massive breakout, which this one's not as good, but it's still there. Like pretty much whatever they were doing in these last couple of candlesticks right here, I'm actually going to include that wick, but whatever they were doing kind of in here, is what led to, oh, and you can see that one just barely wicked to it, but ultimately you're looking for sells, right? That one, honestly, I probably would have stopped out on that one. Probably would have stopped out, but the concept is there, right? So obviously they built up this support level, built up this resistance. The market broke down. Now your mind's looking for sells. Okay, if the market ever comes back to that area where if it ever comes back up to here where they loaded up on those sells, that's where supply is going to be, and that's going to make for a great sell opportunity. And sure enough, it did come down. Unfortunately, I probably would have stopped out because I would have had my stop either above this wick or I would have had it above this wick, and either way I would have barely stopped out. So that kind of stinks. But the concept is still there. And even if you hit a loss here and there on that and you do it right, I'd say you're still good. All right, let's see if we can find, I really want to find one that works out just great, just perfect. See if I can find something. Maybe even like on a smaller time frame, like something that happened today, perhaps. Let's go to, I don't know, like the Aussie dollar or something. Okay, this one doesn't have as much. This is two back and forth. Two back and forth. What's something that didn't really move a lot today? This one. See if we can find, I want to find something with one of those consolidations I was talking about. Okay, actually, yeah, here you go. Yeah, pound franc actually. Okay, so here's what you've got here. This happened last night and yesterday. This kind of formed yesterday, and then the trade took place today. So this is on a smaller time frame. What do you have over here? We have structure, right? Resistance. You can see the market touched here, 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 and here. Okay. So that's perfect. You got 4 different touches. Okay. So now what we're doing is we're looking at this, and sometime last night or this morning, this broke out. Totally disrespected this resistance that was formed and just broke out. Now, what is the loading up area? Hopefully you can see it. This is the load up area right here. Whatever they did here is what enabled them. Yeah, whatever they did in here is what enabled this breakout that they worked so hard to create a resistance on. And whatever loading up, whatever trades were put in by the big banks caused such a massive move to the upside last night. Okay. Then the market goes up, goes up. So here's what I'm saying. If I were trading this, I would be looking for a buy opportunity when it comes in and dips into this. And then I'd look for a trade to the upside because it broke its structure. So you're thinking buys, right? You're thinking buys because it broke its structure, and this is the thing that caused it, right? So now we go forward, Let's see if it dips in. I'm pretty sure it does at some point. Yep, it dips in here. So now you're in, and then it goes up from there. It's been kind of jagged back and forth, but you can see it dipped into the demand zone, which support is right here. Like that blue line is support, but we're not buying at support. We're buying at demand. Demand is just below. It just happened to be that demand was just below that. So this is where demand is, right? So kind of a cool concept. So that's how I want you guys to look for trades when you're trading supply and demand. Identify structure first, wait for the breakout. Then you identify the direction of which trade you're going to take. Are you going to take buys or are you going to take sells? Okay, well, we know we want buys if you have this type of thing. Okay, dips into demand. Okay, we're going to be buyers because we identified, and it's all about this right here. This is where they had all their orders, right? Specifically, I think you could almost like narrow it down to there. That's where the orders are, right? That's where it is. And yeah, sure enough, this market dipped right into it later today. Move this over. Yeah, it dipped right into it. Yeah, pretty amazing actually. So that's the type of trade we want to take, more trades like that. And they happen pretty much everywhere on every time frame, every currency pair, but you're just looking for this kind of thing. So that's how you effectively use support and resistance and trend lines. So you're looking for things that have at least 3 touches, and that's going to be solid. Put it on your chart. Feel the confidence to put it on your chart if you have at least 3 touches on whether it's support or resistance, or if it's trend line, you can have that confidence going forward. And then this is where I teach you in the webinars when we do live trading together. I teach you how to identify this kind of stuff right here. Right? That is the thing that caused the breakout of the structure. So naturally that's going to be demand. And sure enough, the market came back into it, tapped in, and boom. So you wonder how people take amazing trades. You're like, you know, if you ever wonder, how did somebody know to buy just right there? It's because they did this. They did this analysis beforehand. And sure enough, that's how it works, right? All right, guys, I'm going to go ahead and wrap up with that. It's been a good day. We got, obviously our USD CAD trade is doing great. If I update this here, you guys can see the USD CAD trade is doing fantastic. We're short on the USD CAD right now. It's a swing trade I'm going to hold over the weekend. Yeah, here it is. And I'm holding all the way down to here. It's got another 100 pips to go. So I'm short USD CAD. And then you guys know I'm long on the Aussie yen, which I don't have on that account, but I am long on the Aussie yen. And yeah, I'm just waiting for this guy to break up. This one looks really good on the smaller time frame. Just real side note real quick for those of you that are here. This nice reverse head and shoulders that just popped up on a 5-minute chart. That's a bullish signal. So that's a good sign. Okay. And the fact that most retail traders are selling this right now, we're buying this. Okay, we talked about all the different reasons why this is a good buy this morning. Go back and watch the recording if you missed it, but we've got all sorts of reasons to be a buyer right now and have tons of confidence going into this weekend. So, all right, guys, it's been a good week. I'm really excited. Let's have a fantastic weekend, and I'll see you guys on Monday. Thanks for coming.